Good afternoon. Hello, everyone. And really thank you for joining us today for this month, our SFED Blockchain and Innovation Circle. And we know it's been a bit short notice. Our whole planning and organization is, I would say, as dynamic and as fast-paced as the industry itself. But still, especially, we really very much appreciate that you're all here with us and that you've taken the time to join us. Especially because it is a topic that I believe is really of utmost importance for the crypto industry and highly relevant and impactful. So with that being said, I just wanted to make sure, just some housekeeping announcements, that you're aware we are recording this session. And you will be, you have to build the possibility to raise your hand, and I can give you writing audio rights so that you can participate in the conversation. Juan will further down give the presentation, and we will have a Q&A session following that. But also in the meantime, please feel free to drop questions, best not in the chat, but in our FAQ, in our Q&A section, that we can go through them and that nothing gets lost. So I think we're done with the organizational part, and with that I would jump into the topic itself. So we will be focusing today on the MiCA crypto compliance. And as you all know, MiCA regulatory framework has really a significant impact on how crypto assets are managed and regulated, and that not just in Europe, but on a global scale. And while it presents a really major opportunity with opening up a huge market of the 450 million users and 23 million businesses, so it's a considerable market. We have one harmonized legal framework for that, so that, which means that with one license acquired in one of the EU or EA member states, you can address the whole of the European market. Having said that, major opportunity, sure, but also it brings a lot of challenges, particularly in the area of industry coordination, of compliance costs and sustainability. And this is where the MiCA Crypto Alliance comes into play. So this is really a key initiative that is focused and aimed at addressing exactly these challenges. And I'm really proud to say that I've been nominated and chosen to be part of the MiCA Crypto Alliance steering committee. And with us today, we have actually Juan Ibanez, who will present the MiCA Crypto Alliance, what they are setting out to do. And with that said, I would hand over to Juan. And thank you very much for your willingness to come here to our BIC and to present the MiCA Crypto Alliance. And so I would hand over to you, ask to present yourself and kick off with the presentation, and then looking forward to the questions and discussion following that. So welcome, Juan. Thank you so much.
All right, thank you so much, Clara, and thank you to your office, to Sydney, and to the entire team. I'm very happy to be here at the Blockchain Innovation Circle. And also thank you for your support with the Alliance, which is part of what we are going to be discussing today. The name of this webinar is about shaping the future, best practices under MiCA for a thriving crypto ecosystem. I wish I were able to, in 40 minutes, 1 hour with a Q&A, give the definitive guide of all the best practices, and that's the final word on all of it. Unfortunately, of course, that cannot be done, right? We need to come to an agreement on some of these best practices are. Of course, I have my ideas, but we will discuss why we need best practices, what these best practices are on, and how we can come about in coming up with these best practices. And of course, the MiCA Crypto Alliance, this new initiative, is going to be an important explanatory factor in all of this. So my name is Juan Ibanez. I'm the Executive Secretary at the MiCA Crypto Alliance, also Chief of Staff and Chief of Sustainability at the DLT Science Foundation, a foundation for blockchain education and research, and for the advancement of the crypto ecosystem. So without further ado, right, what we want to understand first is what there is to establish best practices about. What is MiCA about? And of course, MiCA is leading and very comprehensive because of very comprehensive and henceforth because of how comprehensive it is, a leading regulatory framework for crypto. MiCA has also been described a bit of a copy of MiFID, right? The Markets in Financial Instruments Directive, Markets in Crypto Assets Directive, they even sound similar. And that's why when we discuss MiCA, what most people have in mind are MiFID-like requirements, and that is mostly authorization and licensing. So the licensing of crypto asset service providers and the licensing of stablecoins is one of the key things that everybody is already thinking about when we discuss MiCA. And of course, then there's the associated requirements that are orbiting around this, from market integrity requirements, prudential behavior, customer protection, compliance, and anti-money laundering, etc. But what I'm going to also be drawing attention to today is that actually there are other requirements of MiCA. And some of them have been slightly forgotten, overshadowed perhaps by the other requirements, and also being rediscovered now because of a renewed sense of urgency that has to do with the timeline of MiCA. One of these two requirements I'm talking about are the requirements for sustainability indicators for all the crypto assets. So crypto assets trading in the EU, they need to have a number of data points, fields, that correspond to their environmental impact. We're talking about their energy use, but also their carbon footprint, their water footprint, their usage of natural resources, the emission of electronic waste, hazardous waste, the percentage of recycled waste in the electronic materials that lead to that compose the validators of the network. There's a lot of indicators, and that's obviously these indicators have like a general form, but then there's also then emission, energy, water, waste intensities, right? Think of, for instance, the amount of energy used per transaction of the network, right? So this leads to a total of 36 indicators in the latest regulatory technical standards package by the European Securities and Markets Agency, ESMA, some of which are mandatory, some of which are supplementary, that is mandatory sometimes, not mandatory other times, and some of which are purely optional. So you can see it's a lot of indicators, basically. And these indicators, they need to be prepared following a given methodology that needs to be disclosed as well within this information. So that's also a lot of work to generate. And it's very important, as we will see later, that these indicators are comparable. We don't want to see parties generating their own indicators out of the blue from whatever assumptions they believe fit best to their case, but resulting in an incomparable scenario where one crypto asset has indicators made in one way, another crypto asset has indicators made in another way. This also would enable a risk for a race to the bottom, where crypto asset projects, they are selecting deliberately more favorable assumptions to be able to show more favorable results, and with the final result of this sort of prisoner dilemma is that everybody has very bad quality indicators, and then ESMA has to step in again with a new legislative proposal. We wouldn't like to see that, right? So who has to prepare this? Who needs the sustainability indicators? And we'll come back to actually the coordination problem of who needs to do it. But formally, at least, obviously, exchanges need to have these indicators for all the crypto assets that they have listed. So they need to have a section of their website clearly defined in the homepage where they can extract, where the user can visit these indicators and extract them in the format of a downloadable file. But also, all other crypto asset service providers will need to do this for all the crypto assets that they give services in relation to. So that means that this information is going to have to be generated and circulated to a wide number of players. Now, at the same time, there is another requirement of MiCA that I think until recently had been under-discussed, and now it's creating a sort of a bit of an urgency as it has been rediscovered, and it is MiCA white papers. So MiCA requires every crypto asset to have, in the EU, to have a white paper. Well, you might say that's good. I work in a crypto asset project. We already had a white paper. We did one in 2012. Well, no, it's not that white paper. It's a different one, a new white paper that needs to follow a very specific format. It needs to be digitally tagged. ESMA has established that the form of machine readability is IXBRL tagging. It needs to have between 10 and 12 different sections, each with a number of fields, resulting in around 400 perhaps fields per white paper. And these white papers, they need to cover a number of subject areas from the team involved and all the parties involved in different aspects of the project, from offering, issuing, operating, to the crypto asset in itself, the technology used, the rights and obligations in any public offering, the details of the public offering. It breaks down into a lot of different variables, right? And of course, if it's an asset reference tokens, there will be a section just to deal with the asset reserves. And also, again, the sustainability indicators. So these sustainability indicators, they not only need to be in the website of the crypto asset service providers, exchanges principally, but not only, but also in a dedicated section in the white paper. Now, the white paper, there's different white paper types depending on the crypto asset types. Basically, MiCA classifies crypto assets into three main types: e-money tokens, asset reference tokens, and everything else, with the exception of some of the excluded tokens, of course. So each one of these corresponds to a kind of white paper. There is a subtype of the other or the everything else category, which corresponds to utility tokens, but it is a very similar white paper to the general other category. It just has a few distinctions. Actually, the white paper types, they're not extremely different from one another. We have done at the Alliance a mapping exercise and identified like how one section corresponds of one white paper type corresponds to another white paper type, and how one field maybe in one white paper type is actually still present in another white paper type, but in a different section. But there are some unique content requirements per token type as well. So this white paper is a lot of effort to write, right? Because you need the technology expertise, you need the legal and policy expertise, you need the tokenomics expertise, you need to obviously have the legal and policy team there, and the sustainability expertise. And as we will see, there's also a problem of coordination here. So then there might come the question again, who needs to do this? And here the answer is a bit trickier. So the short but less specific answer is going to be everybody needs to contribute to this a bit. We need a lot of collaboration. Now, formally speaking, it really depends on whether a crypto asset is already trading or if it's not already trading by an arbitrary deadline set out at the 30th of December of this year. So if a new crypto asset seeks admission to trading next year, the person seeking admission to trading will need to submit this white paper. So that's pretty easy, right? Whoever is seeking the admission needs to get the white paper. Now, they may outsource the writing of the white paper to somebody else, but it is them that needs to submit this. Now, what happens if the crypto asset is already trading, which is what happens for most of the crypto that we already we have in our hands? Actually, a lot of tokens are going to be issued next year, like every year. So it's not irrelevant at all, the case of the new crypto assets. But it's obviously an important question. So there, the answer depends on the white paper type. And probably what's going to be best to understand that is to take a look at the timeline. There's a simplified MiCA timeline here now coming up on the screen. This is extremely simplified. So keep in mind that I'm keeping a lot of stuff out of the slide. So, but basically for e-money tokens and as reference tokens, they already need to have the white paper. And we are aware that not absolutely everybody, every e-money token out there has a white paper just yet, and this is a problem, and we'll see what happens. But a number of these e-money tokens already do. So that's obviously a positive thing. Now, one of the challenges, though, that we see is that these white papers that are already out there, they have been written without reference to the regulatory technical standards. And that's because, in fairness, the regulatory technical standards have not yet been approved. So let me take a step back for those that are not as familiar with MiCA. MiCA in itself already establishes the requirements that a white paper has to abide by. It establishes section types and what these sections need to discuss. But a lot more granularity is needed to exactly know how to write the white paper, right? If MiCA, to give an example off the top of my head, MiCA establishes that there should be a section of the white paper on risks, and it should discuss a number of risks, including governance and technology risks, then obviously you know that your white paper needs to have that content. But what are the exact fields that this white paper needs to have? Is governance going to be one section and technology going to be another section? Are we going to break this down, these sections further? Are we going to add a few other sections? That is not the job of the regulation to establish, but of the regulatory technical standards. And these regulatory technical standards, the RTS, are prepared by ESMA. And ESMA has already done the work of drafting. There was a first package, and on the 3rd of July, they published a second package with their version of what these regulatory technical standards should be. This has been submitted to the European Commission, and the European Commission and then the European Parliament need to approve or not approve these standards. When is this going to happen? It should happen in the next 2 weeks. So we are looking forward to it. But in the meantime, the white papers have already become mandatory. So they have not been written with reference to the RTS, and that's not ideal, right? What we would like to see is then the white papers updated and improved after the RTS are there. Now, for the other crypto asset types, that depends again, well, it will be mandatory from the 1st of January of 2025. In fact, 30th of December of 2024 is actually the cutoff. And as I was saying before, there's a difference between crypto assets that are already listed and crypto assets that are not. Admitted to trading would be the correct term. So if they are not admitted to trading, then again, 31st of December, it will be mandatory. For those that are already admitted to trading, they will have a grace period, a transition period that goes up to the 30th of December of 2027 for the white papers to have to be elaborated. If the white papers are not elaborated by then, then it will be the duty of the exchanges to prepare, if necessary, these white papers and submit them, or to delist the crypto asset. Now, delisting is in general the penalty that is hanging over as a Damocles sword under all of this by action or by omission. There are a number of penalties that MiCA establishes on crypto asset service providers when they don't follow MiCA. They are not always delisting, right? But what you'll see is that the crypto asset service provider is subject to the penalties unless it delists. So from the point of view of the crypto asset project, it looks like there's a penalty of delisting, right? But that sounded like good news in a way. There's no need to worry until late 2027 about the white paper. And I actually would say, no, that's not actually the case. There's a number of reasons why crypto asset projects may want to have a white paper sooner rather than later, and ideally in the first half of 2025. One of these reasons is that ESMA is going to be, as it's required by MiCA itself, publishing a public registry of white papers received, where we will all be able to see which white papers have been submitted and which ones have not. ESMA is also supposed on the 30th of June of 2025 to submit a report to the European Commission, and then the European Commission actually also needs to submit a report to the European Parliament in consultation with ESMA on the application, on the implementation of MiCA, discussing, among other things, the white papers that have and haven't been received, the problems that have been identified, and any legislative proposals needed to address the issues identified. So what we could end up seeing is some sort of naming and shaming versus naming and praising of those who have submitted the white papers versus those who have not, and something else as well. We could also be seeing standards being set by those that submit first. The first white papers to make it could become a sort of de facto standard for others. So that might mean that crypto asset projects that submit too late may need to follow rules set out by others without consulting them. And there's one more thing that calls for early elaboration and submission of white papers, and that is ESMA's power to penalize misleading marketing communications. So when there are misleading marketing communications, there's a range of sanctions that ESMA will be empowered to set. Now, what is a marketing communication that is misleading is obviously a term that is up for debate, and that would be like it's out of scope for this webinar. There's a lot we could say about that, but one initial thought that we have over here is that a communication is not misleading if it is consistent with a white paper that has been elaborated properly, following standards, that has been reviewed, that has not resulted in any observations. So I'm not saying this is the perfect defense, but certainly it could help. So there's a number of reasons, in short, why having a white paper, even if you are in the other crypto asset type and you're already admitted to trading, why you might want to have this crypto asset white paper sooner rather than later. So then there's the question, well, who needs to write the white paper in these cases? And that brings us to part of the problem that we are seeing right now. So what we are seeing, and also part of the rationale for creating this alliance, is a problem of coordination. So we have spoken with a number of exchanges, layer 1s, layer 2s, discussing how they are trying to abide by MiCA, what problems this causes for them, etc. And to be very transparent, what they tell us is exchanges sometimes tell us we're not going to write 250 white papers. As simple as that. So the crypto asset projects basically the main foundation or company, or one of the main foundations or companies behind a particular crypto asset project, they need to submit this to us, the exchanges, and then we, if needed, we can submit it to this registry, but we cannot write from scratch the 250 white papers. We don't have the knowledge, it is too expensive, and at the end of the day, it is them that have an interest in the white paper to be published, because it is them that want to remain serviced, that want to remain listed, and that want to be described properly and correctly. It's also them that have the information about the crypto asset project. Now, when we go to the crypto asset projects, basically speaking with layer 1s and layer 2 teams, what they tell us is, well, in many cases, it is, we didn't even know MiCA existed. We're not based in the EU, or we had heard about MiCA, but not much. We didn't think we were liable for anything. Let me ask my legal team. They ask your legal team, and what they find is that their legal team tells them nothing to worry about. Nothing to worry about, because we are not a person seeking admission to trading. So we are not supposed to be the ones writing this. Somebody else should, but who is this somebody else? And what ends up happening is, here, after a process of learning of what MiCA is like and about, what we end up seeing is that the layer 1s and the layer 2s, while they may not consider themselves to be directly required by MiCA to submit this, they want this to be submitted. They want this to be written, because they want the crypto asset to remain serviced and listed by CASPs and exchanges. They also want to be described fairly and correctly, and so they want to have a say in how the white paper is written. So that is showing us that there is a problem of coordination between the layer 1s and 2s and the exchanges. At the same time, as we were saying before, there's other forms of coordination problems. We need to coordinate many different teams to write a white paper: legal, policy, sustainability, technology, tokenomics, etc. So that requires a lot of work. And also, it's not just a coordination problem, it can be a knowledge problem. Sometimes the expertise to write the white papers in the right way may not be there. Now, what can be done is to hire an expensive law firm, and the law firm can write this for the project, but the law firm also does not have this information. So the law firm can write a white paper for you, but you, as a crypto asset project, you still need to give them a lot of the information that they're going to need. Often they are going to be asked to provide a first draft of the white paper that then they can pour into what they consider their internally approved template. That's a lot of cost and a lot of man hours as well, and so it is slightly an issue. Then there's another coordination problem, and it's a coordination problem across different layer 1s or layer 2s, because, in short, any given layer 1 does not want to write, submit, publish their white paper in a way that is very different from other crypto asset projects. What everybody would like to see is their crypto assets to be broadly equivalent to others' crypto assets, so that they are not seen as under-discussing or omitting a particular matter from the white paper. There's also an issue, as I mentioned before, of methodologies. How we are going to delve into a particular disclosure requirement or indicator, for instance, a sustainability indicator, we need comparable methodologies for this, right? Otherwise, we can end up in a situation, as I mentioned before, a race to the bottom. Take, for instance, a crypto asset project calculating their energy consumption based on the number of validator nodes, and another crypto asset project calculating their energy consumption based on the number of validator nodes plus relay nodes plus user nodes. That's not comparable, and actually the first crypto asset project is going to be have a more favorable results just because they're considering less nodes. Maybe their methodology is right, actually, because in their view, only validator nodes participate in validation of transactions, which is the energy consumption that MiCA is interested in. But nevertheless, they are getting more favorable results relative to others because they picked more favorable assumptions. We would not like to see that. Nobody would like to see that, in fact. So there's another coordination problem right there. And as I mentioned before, also, even the regulatory technical standards have not yet been approved. When they will be approved, there will be very, very little time to write the white papers or to generate the sustainability data. There's less than 2 months, basically, between the beginning of October and the 30th of December. So that is quite a challenge. Also, we've seen that some white papers were written following the first RTS pack of ESMA instead of the second that had been released by July, which meant that a number of the white papers that were released in early July, they were actually outdated as soon as they were published, which was not great, and just comes to illustrate how quickly we need to react and act for all of this. And finally, even given the RTS, there's a lot that the RTS keep vague. Take, for instance, the discussion of risks, right? The RTS established that you need to discuss such and such and such risks, but all the guidelines that we get about this are, well, you should use free alphanumerical text, but that is quite broad. And as I was saying before, layer ones and layer twos, they want their white papers to be not very different. They don't want to under discuss one area just because they didn't think about it. So coordination, again, is key. Just checking the Q&A, although I think I'm going to be leaving that for the end. So yes.
Yeah, so we will do it all together.
Right. Fantastic. So, well, I've been spending some time talking about problems. I'm not trying to turn the webinar into a publicity webinar, but also want to talk a teeny bit about some of the solutions. And we are launching, as Clara mentioned, the MiCA Crypto Alliance as an initiative to solve some of these problems, to set best practices, to allow the industry to coordinate and to lower costs while doing so. Because often best practices and coordination are things we associate with more costs, not less. And this is an initiative set out in a way and designed in a way to do the opposite. Set out best practices while lowering the costs. As I mentioned before, it is principally a coordination problem between many parties. So the alliance is a forum open to the entire industry so that all sorts of players in the industry, especially layer ones, layer twos, and the exchanges themselves can coordinate and set out the best practices. But we're also going to be servicing the alliance from the foundation. So as I mentioned, I work with the DLD Science Foundation, and we are going to be empowering the alliance with tools. And this is going to be one of the key things in lowering the costs. We are going to be providing climate data. I mean, that this is the sustainability indicators. I mentioned 36 indicators before. That's what I'm referring to. We will be providing this to the alliance members as well as a white paper tool. So quick few words about us and about the alliance. As I mentioned, the alliance is open to the entire industry and powered by the DLD Science Foundation. Right now, we have 3 founding members, Ripple, Hedera, and Aptos Foundation, and we have a huge pipeline of new incoming members. We actually only launched last week. Their reaction was very, very positive. We are very pleased with what we are seeing. And we had gotten a lot of inbound, so we're processing many other applications, and there were also a number of other exchanges and layer ones that had applied to join pre-launch that didn't manage to make it to the launch, but we're working on onboarding them as soon as we can. And the vision for this is that the entire industry will be here, but it is not going to be a massive policy forum where everybody's discussing current events and there's a newsletter. We don't want to replace forums that already exist, which would be redundant and time consuming. We want to have the entire industry here, but also to solve very concrete problems. And not just solve the problems, but also take the problems as an opportunity to do something good and create best practices that will elevate the industry at large. So, few words about ourselves. So at the DLD Science Foundation last year, we already started working in the first half of the year on the first MiCA white paper that we know, which was an academic exercise submitted to an academic peer-reviewed journal that was accepted last year as well. It was before the RTS existed, so obviously right now we write white papers in a different way, but it was a great exercise. We then did it again and again. Also working with some of our partners, we became pretty good at writing some of these white papers. And then we had this idea, why don't we train an LLM on these white papers that we've written? And so we did it. We tried it. We did a proof of concept first, and then we started doing a proper training. Proper training requires not just relying on the general knowledge of the LLM, but also doing a labeling exercise, right? And teaching the LLM how we selected the information from existing sources and put it in the correct format in a white paper. Because a key thing in all of this is that lots of the knowledge required by MiCA for the white papers already exists. It's already out there. It's already published. It exists perhaps in the original white paper, the non-MiCA white paper of the crypto asset. It can exist in the yellow paper or the technical white paper. It can exist in a number of reports and blog posts. So when we are writing a white paper, a MiCA white paper, we consult existing sources and we teach an LLM to do the same. And the results are very good. It's very exciting. The tool is actually able to write the white papers, and it just saves a lot of time. This does not replace a legal or a policy team. It just saves them a lot of time and effort because a lot of the effort here is sort of manual, repetitive work, and we've managed to automate that. Also internally, we had developed a white paper scoring tool. This was completely for internal purposes when we developed it, but it's also generated some interest, so we are working on making that available to the members as well. And as I mentioned before, I'm not sure I mentioned it before, but at the foundation we also have some policy expertise, and we've been involved also in the MiCA/ESMA process. So we submitted responses to ESMA consultations, etc. So writing white papers was a natural fit for us. And for many years, our core team, even from before our foundation even existed, we have been working on investigating and elaborating sustainability indicators for crypto. Our work started around 5 years ago, when we started publishing some of our work on crypto carbon footprint, crypto energy consumption, and crypto carbon footprint. And really, when we discuss sustainability indicators, crypto energy use and carbon is at the core. And energy use, in turn, depends mostly on the number of validators as well as the validator types. But really, this is at the core. So once you have done this initial groundwork, you can start expanding onto other sustainability metrics, like the water footprint, for instance, of a crypto asset, which is derivative of the energy consumption of the crypto asset. And just like you calculate the carbon footprint by multiplying an energy consumption for a carbon intensity, there's a lot of work into that, but that's the essence of how it works. You also can take a water intensity and multiply that for the energy consumption to get the water footprint, right? Now, obviously, each one of these variables requires a lot of work, but at the core is energy consumption and the number of validators. A similar thing happens with e-waste, that depends also on the number of nodes and their lifespan and their specifications. So we've been working on that for many years, And in the past years, we've also expanded significantly our database and created a dashboard, a live dashboard of crypto climate data. So we're going to be having some news about that very soon. Then, since we had this huge amount of data, between 200 and 300 crypto assets soon, depending on how many we manage to release as soon as possible. We are sitting on the largest data set there is on crypto sustainability. So we're very, very proud to say that, and we're making that available to the Alliance members. So the Alliance members will be getting this human in the loop white paper elaboration tool and also the sustainability data. And this in itself should save them a lot of costs. But as I mentioned before, the key thing is having the industry come together and coordinate what a best practice is. It's not just like providing sustainability data or white paper tools. So how do we do that? Well, we are inviting all of the Alliance members to decide what a best practice is. The Alliance members will decide the standards, the bar that needs to be met. And then we will retrain our AI to implement whatever the Alliance members have decided. So we have a white paper elaboration tool. This white paper elaboration tool will be improved every time the Alliance members make a decision on what a standard is. Now, as I mentioned before, policy groups, they consume a lot of time. And if we're trying to have the entire industry, that is even more time, right? And we definitely do want to have the entire industry, but we are also very mindful of time consumption. So instead of having regular meetings for the entire Alliance members, we are going with a system of online ballots. These online ballots will be obviously open only to the Alliance members, and the Alliance members will be deciding there what their decision is on a best practice for every given subject area. So we will take the result of the ballot, whatever it is, and retrain our tools to implement exactly that. So you see, by voting on a ballot and deciding what a best practice is, the Alliance members are not increasing their overhead, they're reducing it, because by deciding what is the best practice, they get a tool that already does that they decided should be done. So that is like one of the neat tricks. Obviously, we will be updating the tool as new data comes out, or as legal or regulatory requirements are updated. So the white papers and the sustainability data will need to be updated regularly. This means, well, we'll see when the final RTS are out, but it means at least once a year, or when the underlying information materially changes. But you may ask, well, this is very nice, but where does the ballot come from? Who actually suggests ballot options? And while we will be doing as much as we can to support and save time for everyone, we thought this needed to be done by independent experts. So this is why we have assembled a steering committee of world-leading specialists, really experts in MiCA, and we're very, very proud to count with their advice. They will be providing this advice independently, and the members will be deciding whatever they will decide. But this is how we are going to ensure that high quality input comes in the ballot options. Now, many of the crypto asset projects also have obviously a preferred law firm that they usually work in. So we think this is going to save them a lot of time if they want to go to their usual law firm, take the white paper, take the sustainability indicators, and get a review, a check. And this should be less costly than having them write it from scratch. That said, we are onboarding a tier 1 law firm to the Alliance that is also going to be able to do this review for the Alliance members, if the Alliance members so prefer. This is entirely up to them. We're really trying to increase their their freedom and their choices available. So that's definitely something that is going to be possible. So that is pretty much the proposition. And now, as you can see, these are our steering committee members on screen. You can see Clara there. Thank you, Clara, again. Really appreciate your participation. And we are really very honored for their involvement. It is a really a committee we're really proud of, and we are really, really happy. So I have little more to ask. To add to that, I myself will be participating in a technical committee that will be supporting the steering committee, as obviously they're very busy people, basically. So yeah, this is in short our idea. I would just like to close with some wrapping thoughts. It is very, very important for the industry to come together. Recently, I was in a conference where somebody was saying MiCA is both an opportunity and a threat, right? It is in a way a signal of maturity of the sector that it has received regulation similar to that regulation of traditional financial sectors, and this is why we see something similar to MiFID. But also part of the promise of the technology was that it was not a traditional financial sector. So how do we navigate that? And I think one of the key things is to step up when the regulation invites us to do so. Establishing best practices by ourselves, coordinating by ourselves as an industry, shows maturity as well. And I would just like to finish with this open invitation. As I said before, the Alliance is open for everybody to join. So we really look forward to getting even more applications. Please have some patience with us if we don't reply immediately, as we have a lot of inbound, but just very excited about this project, and I just welcome any questions now.
Perfect. Thank you so much, Juan. That was very insightful, I believe, of this impactful topic. And we actually have a couple of questions already that have been piling up over the course of your presentation. So the first one would be if you would agree that the still missing RTS, including the question of obviously whether MiCA tokens will be in scope of the anti-money laundering directive, also with regards to the secondary market, if that would be a deal breaker if it turns out that the secondary market is in scope of the anti-money laundering directive, and hence, of course, all holders of tokens have to be identified by the issuer.
Okay, great. I'm just making sure I select to answer the question. I definitely think that would be a massive turn of events. So it would be very important. I don't expect a lot of changes to the RTS, to be honest. The RTS, we already have the package by ESMA, and I have high expectations that it will not be significantly changed. I guess we need to see in just a few more days.
Okay. Thank you. So next question, as we all know, as they say, the US innovates, Asia produces, and the EU is regulating. So to that end, the EU is forever the regulation world champion. Do the RTS at least contain templates to guide applicants, or will those be provided by the regulators? If you know that.
So there are some templates, not within the RTS itself, but they're easily accessible from the EU MiCA website. I have to say the templates that are out there are not very good. So often the RTS are more detailed than the templates themselves, or the templates can be a bit outdated. But they're good to learn how iXBRL tagging works if you've never done that. I'm not entirely sure if local regulators will be providing any other templates. I have a suspicion that it's not going to be the case. the way in which I see it, and I may be wrong, but licensing requirements are something that has a EU level regulation and then heavily depends on the local implementation as well. Whereas for the white papers, the requirements are already more established by the EU, and then the specifications come more from ESMA. I'm not entirely sure whether we will see local regulators involved as much on white paper templates, but we will definitely be generating some at the Alliance.
Okay, thank you. So the next one, well, thanks to you, Juan, for the interesting presentation, compliment, and of course the obvious question you already mentioned to the questions is who can join the Alliance, and everyone is open for everyone. But the obvious question would be, okay, how the process is going, and probably an add-on to that question. So what are you looking for in terms of collaboration with the industry and the different actors, so be it on policy level or entrepreneurs, other tools, and also, of course, probably advisors in that space. So what are you looking for? How's the process of collaboration? How can the industry collaborate with the MiCA Crypto Alliance?
Great. Yeah, I certainly I have said the Alliance is open to everyone, but there's the question of how what everyone means. So actually, I should have said it's open to all layer ones, layer twos, and exchanges. But then we are also working on being able to involve every other type of player that wants to be involved. Notably, of course, all the other crypto asset service providers, CASPs, is for us very important to have CASPs involved in the Alliance, and we're working out on the system to have them join. In addition, we have a lot of interest from different players, including like law firms that want to be a part of the Alliance. So we are beginning conversations to try to have as many technical partners as possible. Obviously, trying not to create a hypertrophia in the Alliance. It needs to be something that operates swiftly, but it is also very important for us that the entire industry is together. So what I would just say is if somebody is interested in joining, just reach out and we will have a conversation with you. There is an application form already in the website. So I will also share it in the chat. It's micacryptoalliance.com. And there you'll find all of the information, but you can also just write to us at mica@dltscience.org, and we will be in touch with you and happy to have that conversation.
After that, also to the presentation that you've shown, would it be okay for us to send that to the participants of today's webinar?
Sorry, could you repeat that question? Pardon.
If we would be able to send the presentation that we've shown to the participants of the webinar.
Yeah, I think this is recorded and going to be uploaded. Yes,
the presentation separately if you
we're happy to share this. Yes,
want us to share that.
Yes.
Okay, great. Then we have another question. If there is an obligation to use the Alliance white papers or sustainability indicators?
No, there isn't. We are empowering the tools to do the Alliance members, sorry, to do whatever they choose, and to, yeah, as I said, I think empower is the word, to enable them to comply with the law the way in which they see fit. But for instance, if they wanted to use different sustainability indicators or modify the output of the white paper generation tool, obviously they can do that. So there's just no obligation attached to that. It is entirely optional, and just the benefit is that you get the ability to participate in the best practices generation, and then if you want to follow these best practices, you already have the tool to do so.
Okay, great. And then two more questions. So how are you dealing with sustainability indicators for utility tokens that have little to no information on how much energy is actually consumed at the layer 1 level, when sometimes they're built to levels above layer 1? And from a white paper standpoint, what do you think will be the standard for describing that?
Yeah, for both of these questions, it is not for me to say ultimately. So I will voice my opinion now, but ultimately the alliance members will decide. So it will be up to them. In terms of utility tokens, so let's first start with utility tokens, and now we talk about the question of them being built 2 levels above the layer 1. So a utility token, or any other token for that matter, consumes a percentage of the electricity of the layer 1. They don't have separate validators, separate computers consuming energy. They represent part of the activity in the layer 1. So if you have the information of the layer 1, you are able to calculate what percentage of the layer 1 activity is caused by the token, and therefore you take a percentage of the layer 1 indicators and attribute that to the token. So that's how you calculate the token's energy consumption, carbon footprint, water footprint, etc. It's a percentage of the layer 1. Now the question is, how do you deal with a token being removed 2 levels above the layer 1? That is, for instance, a token built on a layer 2. And maybe then there's also a decentralized application, and on top of this, there's the token. So in that case, you just need to repeat the process step by step of trying to understand what the percentage of each base layer's activity is attributed to the second layer. Whether it's layer 1 or layer 2, layer 1 or layer 0, decentralized application or layer 2, it is more or less the same process. Now, there is a number of nuances to this. One of these nuances is that a token could be a multi-chain token. So if it's a multi-chain token, this might be a bit tricky, because you need to also repeat the process for other chains. And when you're trying to calculate intensity metrics, like divided by the number of transactions, etc., it becomes a bit trickier, but it can be done. There may be a few methodological options that we will be outlining and leaving to the members to decide. But it does not seem like an unsurmountable problem. In fact, it is the kind of problem that is solvable, and that we would hope to see members solve by choosing what the best practice is. The other question is, without a standard, what is the expectations? And there's this mention of what happens when you're issuing a token and the token has not even operated for more than 6 months. So obviously a lot of the information is not available. So in this scenario, what it is expected from the crypto asset project to do is to act on a best effort basis. In the case of sustainability information, obviously, if you have 3 months of sustainability information, you would need to try to annualize these 3 months to 12. But that might be a misleading exercise in certain cases. So that is why it is important to come up with standards, so that it is not one individual player making the decision on how to do the annualization or what best efforts mean, because that means you could be manipulating whatever best effort means for the purpose of looking good. With standard, though, whatever the standard is, you have a bit more standardization and just transparency about the whole thing, and comparability. Obviously, it is a problem, but it is, again, a solvable problem if this is something you have a standard for.
Okay, great. Well, I'd love to see that interest and enthusiasm about the topic, and think, but in view of the time, we've been going over the time a bit, and I would say we will be closing here. But thank you, Juan, first and foremost, of course, for its amazing insights and taking that time, but also thank you for participating today to all our or to the whole of our audience, and just a quick to feel the pulse. I hope you're all liking the new time frame that we set for the BIC, that we're not doing it at 5:30 in the afternoon, but shortly after lunch. But if you have any input, feedback regarding the format, but also of course the topics that we are presenting in our blockchain innovation circles, then please reach out and let us know, because this is a platform designed to further the innovation ecosystem, and we want to promote this discussion. And so we are depending on your input. We want to bring topics and people and here on stage that are of interest to you, so that you're benefiting from that. So thank you to all of you. Please keep an eye out for more updates and our next blockchain innovation circle. I'm happy to announce already that the next one will be staying within the topic of MiCA crypto compliance. It will be called AI-driven compliance, navigating MiCA and beyond, with and by Alejandro Vargas from Mooncheck. So I think this is just it's a similar topic, but it's of so relevant and impactful and important for all crypto asset service providers, advisors, and the whole community, that we stick around with that vicinity of the topic and look at it from probably slightly a different angle and perspective. And by the way, I will also make an introduction to the MiCA trusted compliance, because that could be one of the actors that is doing amazing work there, and I think that could be an interesting opportunity for collaboration. So with having said all that, thank you so much. Thank you, Juan, again for your contribution and insights. And oh yeah, the date. The next BIC will be on the and I'm not saying anything wrong, will be on the 22nd of October. And it will be again at the same time, so at 1:30 p.m. Central European time. And yeah, with that, I wish you all a very nice afternoon. The recording will be made available on our video blog in a couple of days. And I'll be looking forward to seeing and engaging further with all of you, and at the latest to see you at the next BIC on the 22nd of October. So thank you so much and have a nice afternoon. Thank you, Juan.
Thank you once again for the invitation. Love to be here.